Underground command post, deep in the bowels of a hidden bunker, somewhere under the brick and steel of a nondescript building, we've once again made contact with our leader, Mark Levin.
Good evening, my friends. This is Mark Levin. You're not going to want to miss this show. Our number, 877-381-3811. 877-381-3811. And I want to tell you a little bit about it. About how the liberals in government, whether they be elected or appointed, whether they be bureaucrats or politicians, how they work together and bring us to this point. And then tell you that the problem is free markets, the problem is capitalism, the problem is greed. They lie. The Community Reinvestment Act, CRA, is a federal law that requires banks and thrifts to offer credit throughout their entire market area. And it prohibits them from not giving loans to poorer areas within the reach of their communities. They call this redlining. They call violations of this redlining. And the purpose of this act is to provide credit, including home ownership opportunities, to what they call underserved populations and commercial loans to small businesses. The law was passed by Congress in 1977 under Carter as a result of national grassroots pressure from groups like Acorn, an ultra-left-wing criminal enterprise, in my humble opinion, which brought pressure for affordable housing for the poor. And yet it was opposed significantly and aggressively by the banking community. But they had no choice. It became law 31 years ago. The law mandates that each banking institution be evaluated to determine if it has met the credit needs of its entire community. That is, if it's given loans to enough poor people or people who can't really afford them. And then that record's taken into account by the federal government when it considers an institution's application for mergers and acquisitions. And so the law is enforced by the federal government. And in 1995, as a result of interest from Bill Clinton's administration, particularly Janet Reno and the Office of Housing and Urban Development, the department, the implementing regulations for the law were strengthened by focusing the financial regulators' attention on institutions' performance in helping to meet community credit needs. So they really, really pushed them. They used the force of law to compel these private institutions to make bad loans. These changes were very controversial. And in fact, the lady who was in part in charge of this, an assistant secretary over at the Housing and Urban Development Department, had been a former supervisor in San Francisco. Now, the Clinton administration's regulatory revisions, with an effective starting date of January 31, 1995, were credited with substantially increasing the number and aggregate amount of loans to small businesses and to low and moderate income borrowers for home loans. Clinton used to brag about this. A part of the increase in home loans was due to increased efficiency and the genesis of lenders like Countrywide that did not mitigate loan risk with savings deposits, which traditional banks do. They were using the new subprime authorization of 1995. Are you listening to me? This is known as the secondary market for mortgage loans. The revisions in the law allowed the securitization of CRA loans containing subprime mortgages. In other words, They had to figure out how to give loans to people who don't qualify for the loans under traditional procedures. So they changed the procedures. In other words, the loans were not capitalized. So you have no down payment loans, no interest loans, low interest loans that turn into higher interest loans over time, and on and on. They were trying to be creative in what they could do, and they had to be under the threat of losing business practices and activities as compelled by the federal government. The federal government compelled this activity and compelled this behavior. The first securitization of CRA loans started in 1997 with Bear Stearns. Okay? Now, in 2003, the Bush administration recommended what the New York Slimes called the most significant regulatory overhaul in the housing financial industry since the savings and loans crisis a decade ago. This change was to move governmental supervision of two of the primary agents guaranteeing subprime loans, Fannie Mae and Freddie Mac, under a wholly new agency created within the Department of Justice. And it would give it more oversight power, more auditing power. And it would require these two so-called companies to better capitalize their debt. Okay? Even so, what remained was the implied guarantee that the American taxpayer, should anything go wrong, would back up these loans. But that legislation to strengthen these programs, to move the oversight to a independent, separate agency, was blocked in 2003 in Congress. And it was blocked by the Democrats, because the Democrats were in bed with Acorn and these other community activist grassroots groups of whom Barack Obama is quite familiar. These are the constituents of the Democrat Party, that is, these groups, these left-wing groups like Acorn. Frank was in bed with them. Chris Dodd was in bed with them. The Clinton administration was in bed with them. And so they blocked the reforms proposed by the Bush administration in 2003. And Barney Frank said at the time, these two entities, Fannie Mae and Freddie Mac, are not facing any kind of financial crisis. The more people exaggerate these problems, as I underscored this the other day, the more pressure there is on these companies, the less we will see in terms of affordable housing. So basically, the socialists forced the private sector to behave in ways the private sector didn't want to behave, but was forced to behave under threat of law. And that is to give loans to people who were bad risks. And then the two government-run, in essence, companies, Fannie Mae and Freddie Mac, when the Bush administration said in 2003, look, we got a problem here. They don't have enough capital. They're running wild over there. We don't have enough oversight and auditing activity. We want to break out that activity, make it independent so they can oversee it, force them to capitalize against their loans better. They were blocked. Now, I don't know if we can't talk party. We have to talk party here, because the only way you have accountability and the only way you fix this situation is to know who and what is responsible and what policies got us here. Now, these policies encourage the development of the subprime debacle through this CRA legislation, which forced banks to lend to uncreditworthy customers, which they're now being criticized for having done. And before this debacle, while they're attacking these huge financial institutions, they would praise them for all the uncreditworthy, risky loans they were giving.